So the next area is composition scheme. This is segment 10. In this composition scheme, we have two sections. So first of all, we need to understand when composition scheme is applicable. Composition scheme is an optional scheme, and composition scheme under 10.1 is not applicable. Then they can go for composition scheme under 10.2a. So which means that there are two composition scheme, 10.1 and 10.2a, and it is optional. So composition scheme is, rather than paying GST at the regular rate, they will be paying GST at the reduced rates. Disadvantages of composition scheme is that they cannot avail ITC on their inward supplies, and they cannot charge GST to their recipient. But the advantage of composition scheme, if you see that the price will come down because they will not be charging GST to the recipient, and because of which the sales volume will increase and the total profit also will increase. And 10.1 composition scheme is applicable if their aggregate turnover during the previous year does not exceed 1.5 crores. In case of 8 special category states, it will be 75 lakhs. What are those 8 states? That will be M, M, T, N, U, SAM. Manipur, Mizoram, Tripura, Nagaland, Uttarakhand, Sikkim, Arunachal Pradesh and Meghalaya. Then it will be 75 lakhs. Whereas composition scheme under 10.2a is applicable if the aggregate turnover during the previous year does not exceed 50 lakhs, and it is common for all the states. To whom it is applicable? Composition scheme under 10.1 is applicable to a manufacturer, trader, supplier, food service provider, and if they provide any other service up to 10% limit of turnover during previous year or 5 lakhs, whichever is higher, still they can be into composition scheme. Basically, composition scheme under 10.1 is applicable to manufacturer, trader, supplier, food service provider, only these 3 people. However, these 3 people, if they want to provide any other services, they can provide any other service up to 10% of turnover during previous year or 5 lakhs, whichever is higher. Whereas 10.2a composition scheme is applicable to every person, manufacturer, trader or any service provider. The 10% limit and all is not applicable to them. What is the benefit of reduced rates? In case of composition scheme under 10.1, for a manufacturer, it will be 1% of total turnover, that is 0.5% CGST, 0.5% SGST of total turnover. But for a trader and that services up to 10% limit, it will be 0.5% CGST, 0.5% SGST on taxable turnover, not on the total turnover. Whereas in case of a supplier food service provider, it will be 2.5% CGST and 2.5% SGST on the total turnover. But 10.2a always one rate only, that is 3% CGST and 3% SGST on total turnover. Then what is the current year limit for the reduced rates? Current year also up to 1.5 crores or 75 lakhs they will be into composition scheme, and if they cross that they will be going to normal scheme. For 10.2a it will be the same limit of 50 lakhs. And to whom composition scheme is not applicable? So you need to remember that S9 RCM. Composition scheme under 10.1 is not applicable, but all these restrictions you need to see for the current year in which composition scheme is opted, not for the previous year. In that, yes, supply of services other than supply of food or beyond 10% limit, they cannot be into composition scheme 10.1. Number 2, non-resident taxable person, NRTP, a person who come from outside India to India, who is not having any fixed place of business in India, and he want to make supply of goods or service in India. He has to register, but he cannot go for composition scheme. Then a person who is making interstate supply of goods or services, whether taxable or exempted, also cannot opt for composition scheme. Then N, non-taxable supplies. A person who is making non-taxable supplies cannot opt for composition scheme. And supply of services through e-commerce operator, only services through e-commerce operator, not goods for e-commerce operator, and that e-commerce operator who is liable to deduct TCS under section 52. Then R is RCM under 9.4. 9.4 is for a promoter or builder. So there are 2 points in this. First of all, a promoter or builder who is making purchases from an unregistered person. So if he is having any stock on which GST is not yet paid, so he, without paying GST on that stock, he cannot go for composition scheme. RCM under 9.4, non-paid stock held on the date of opting of composition scheme. One more connecting point in this regard is that supplier who was unregistered, now if he is registered under composition scheme, so can he make the person like supplier only to pay GST, promoter and builder not covered under 9.4? No. First of all, a person who is supplying to promoter or builder cannot go for composition scheme. Supplier who are making supply to promoter or builder under 9.4 cannot opt for composition scheme. Then C for casual taxable person. CTP, that is a person who comes from other state to this state and is not having any fixed place of business in this state and is supplying goods or services, cannot opt for composition scheme. Then M for manufacturer of notified goods. What are those notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. only manufacturer of these goods cannot opt for composition scheme, but a trader of these goods can definitely opt for composition scheme. Above non-applicability is same for 10(2)(a), except that service provider can opt for 10(2)(a), which means 9 RCM instead of S9 RCM. So you can see the difference in conditions. So for 10(1) it is S9 RCM, for 10(2)(a) it will be 9 RCM. And here they have given notified goods, notified services, but services are not yet notified in this regard. Then what is the meaning of aggregate turnover? So there are three turnovers that we need to understand here. So one is aggregate turnover for determining the eligibility to opt for composition scheme, then turnover for computing 10% limit of services, and turnover for payment of GST under composition scheme. First, aggregate turnover means what? It is computed on all India basis. We need to see it for the previous year. And in this aggregate turnover, taxable supply will come, exempted supply will come, non-taxable supply will come, zero rated supplies also will come, and it will be computed on all India basis. And here one more point we need to remember, that pre-registration turnover will also be included in aggregate turnover for deciding the eligibility to opt for composition scheme. But this aggregate turnover excludes 3 points. Number one, inward supplies under RCM, interest on loans, advances, deposits, and taxes. So taxes, interest on loans, advances, deposits will not be considered in aggregate turnover. Sir, a person who is having non-taxable supplies cannot opt for composition scheme. But how come here non-taxable supplies we are taking? That is, previous year we can have non-taxable supplies, previous year we can have interstate supplies, not at all restriction. Current year, the moment they go for composition scheme, they should not be having non-taxable supplies. What is the difference between aggregate turnover for determining eligibility to opt for composition scheme versus turnover for computing 10% limit? Both are same, ditto. Only difference is that aggregate turnover will be all India and this turnover will be state wise. Then what is the difference between turnover for determining 10% limit versus turnover for payment of GST under composition scheme? Usually this turnover is for previous year, but for payment of GST under composition scheme we need to take current year. Then pre-registration turnover will be excluded, and you cannot have interstate supplies or non-taxable supplies, because if you have interstate supplies or non-taxable supplies, you are disqualified from the composition scheme. These are the three turnovers that we come across in composition scheme. So that is the meaning of this aggregate turnover. Then they can provide service up to 10% limit, but that services do not include interest income. So interest income can be any amount. So other than interest income, the 10% we need to check. And the rate applicable for this service is 1% of taxable turnover. And other procedural provisions. Suppose if they are already registered, can they go into composition scheme anytime? No. So they need to wait till commencement of the financial year, and before commencement of the financial year only they need to apply in CMP2. Suppose if they are not already registered, now any time they can go into the composition scheme by making application for registration, and they need to display that they are under composition scheme in every notice board or sign board or invoice which is at the principal place of business and additional place of business. And they will be required to file a quarterly return. That quarterly return is in CMP8 by 18th of the month following every quarter. And so even they have to pay GST along with this CMP8, and they need to pay GST on advances. So because for a person who is under composition scheme, GST is payable on advances. So therefore, as per section 12 subsection 2, the due date of invoice or actual date of invoice or date of payment, whichever is earlier, will be taken as a time of supply. So therefore, what they need to do during the quarter, how much is the advances received, and that advances they need to add to the bills. So whatever advances that is received for this quarter should be added to the bills on which they need to pay GST, and some advances which was already received for which bills are raised in this quarter needs to be reduced. So first, GST payable on value of bill of supply. Why bill of supply? Because they are under composition scheme. They should not charge GST to the recipient. So therefore, the type of the document that they give will be bill of supply during the current quarter, plus advances received during the current quarter pertaining to next quarter, minus advances received during the previous quarter pertaining to the current quarter. Then they need to file an annual return in GSTR 4 by 30th June of the succeeding financial year. This is an amendment. Previously it was 30th April, now it is 30th June of the succeeding financial year. Then all in or all out. Suppose if all the people are under composition scheme, all the people are under normal scheme, it's okay. But few registrations under composition scheme, few registrations under normal scheme is not possible. Also, few registrations under composition scheme 10(1), few registrations under composition scheme 10(2)(a) also not possible. So either composition scheme or normal scheme for all registrations. They cannot choose normal registrations for few registration and composition scheme for other registrations. Then validity of composition scheme, if all the conditions are satisfied, option remain valid. If the conditions are not satisfied, we need to pay tax as a normal taxpayer, issue the tax invoice for taxable supply, and within 7 days we need to exit from the composition scheme by filing CMP4. So CMP2 is for entry into composition scheme, CMP4 is for exit from composition scheme, and the time limit is 7 days. And remember, whenever you exit from the composition scheme and go into normal scheme, you can avail the ITC on inputs as such lying in stock, inputs in WIP, inputs in FG, and even on capital goods also after reducing 5% for every quarter or part thereof. And to avail this ITC on closing stock, they need to file ITC1 within 30 days. Then, suppose self-withdraw, they want to withdraw anytime they can withdraw by filing CMP4. Suppose if the proper officer has reason to believe that they have contravened the provisions, they will get a notice, they will give a notice in CMP5, and the person should reply within 15 days in CMP6. Thereafter, within 30 days, they will pass an order either allowing the person to continue in composition scheme or denying the composition scheme. Whenever we go into composition scheme, we need to reverse the ITC on closing stock. So therefore, CMP2 and ITC3 are connected. CMP2 is for entry into composition scheme, ITC3 is for reversal of ITC on closing stock, and CMP2 before commencement of the financial year, ITC3 60 days from the commencement of financial year. CMP4 intimation of withdrawal from the scheme. So within 7 days of occurrence of event, whenever you come out of the composition scheme, you can avail the ITC on closing stock. ITC1 within 30 days of the date of conversion. 5, 6, 7 and 8, these are the regular forms. 5 notice, no time limit. 6 reply, 15 days. 7 issue order within 30 days. CMP8 return 18th of the month following every quarter. Whether the denial of composition scheme is prospective or retrospective, it can be either prospective or retrospective. It is at the discretion of the officer, but not before the date on which we committed the breach. And when is it advisable to opt for composition scheme? 10(2)(a). So whenever you are in providing services beyond 10% limit, then you can go for 10(2)(a). Or if you want to provide any service, that is your business itself is not manufacturer, trader or supplier, food service provider, any other service provider, then also it is advisable to go for 10(2)(a). And remember, pre-registration turnover will not be taken. So what we need to do? First we need to see supplies from day 1, April 1st to the date on which you are liable to get registered. Don't take that into computation for composition scheme. Remaining turnover you need to take for computation under composition scheme and pay the GST. So these are the points that we have in composition scheme. Only one amendment. That amendment is related to CMP8, GSTR 4 needs to be filed by 30th June of the succeeding financial year. That's it, and you can prepare based on this. Okay.